Testing, testing. Jesus criminy. It's this audio output. Okay, we're good. We're good. We're good. Let it catch up. I can see it moving. Stop it. I see it moving. Still? Okay, some finally. I got some finally. Works now. See? Boom. Back now. You know, it's the stupid output. And then there's this lag on YouTube. Yes, leave a like. I appreciate that. Do you guys like this stream, text stream on the side? It's kind of interesting. His lips move. The charts move. That's for sure. Who is it? Who is in Chicago on the weekend? Any Chicago people? Dude, what an event. I met some really cool people. I met a lot of our community members. Like that was it was so cool to see people in the community, like in person. Man, amazing. Amazing. I think there's I think it's papergains.com/links. There's a little thing right there. Maybe. If not, it's in the description, guys. But yeah, the Chicago event was insane. I don't like that. All right, we'll take it down in a second once we get into the actual stuff. But you know, coming back from Chicago, I'm like, we had so many questions about different stocks and people interested in certain things and like what's going on. I kind of thought that today would be a good opportunity. I thought today would be a good opportunity to kind of like go over and just, you know, we do this in our community, but like explain to everybody kind of why. Congrats on your calls. June 18th, should I cash one out and let one ride? Does that mean there's two? No. Gamble through earnings, but also they're saying no sound again. How do I turn this chat off? Show on stream. Okay, cool. I watched The Matrix. Here, let me move the mic a little bit closer. Some people are still not on the live session, I guess. But I felt like being in Chicago watching The Matrix. Yeah. I mean, it was cool. It was cool. But there's a lot of people I'd met for the first time or maybe didn't even know me that well. Asking about a lot of different stocks that I was like, why are we talking about this right now? And they were very confused. And I thought maybe it's a good it's a good opportunity today to kind of go through this. But yeah, also we have another event happening very soon. Let me see if I have it. And I put it in the description. But your boy's gonna be in New York. If you don't know, there's this thing called the Wolf Summit. New York, August 3rd. Mama's gonna be almost 9 months pregnant. Basically 9 months pregnant. This is different. If you've been to any of the meetups, this one's gonna be different. And it is, so what you do is you gotta, I think general admission is a little bit more, but I think this one, I think if you put a couple bucks into public with these things, then you can I would click this, then it's way cheaper. But it is a full day. Let me see if I have it. Programming. So an entire day, literally 8 hours plus some, starts at 8 a.m. Event kickoff, live trading sessions, one guest, two lunch booths and photo ops. Oh, I think we got to figure this one out. Speed networking tables, special guests. Your boy is one of these special guests, live trading for the close, and another speaker guest. I mean, there's a ton. I know this guy. Yeah, these are all the speakers. Some of them, you know. I know a lot of you guys follow Stock Talk. I don't know if you know Peter, my girl Sim, JC Scott. There's a lot of people from the crew, but everybody's got a spot here. And it's a big event. So check that one out if you haven't. Let's do this. From beginning. Yeah, this one is different. It's different. It's like actually training and we teaching. And yes, Einstein is there. Your boy will be there. And we're all teaching one little piece of our special sauce. Everybody. So there's, even if it was $2,000, even if it was $5,000, first of all, this is Wolf's first event like this. If there's probably only a couple days to get your spots in there, that's very limited. I'm 1,000% positive this is going to sell out very quickly. And so they just launched the site. Yeah, so if you want to be there, if you want to see me, you want to see anybody there, you want to talk to us that you haven't had a chance to, if you want to watch us teach some of our core stuff, all of us, it's the first time I think we're ever going to do a live event like that with a lot of professional traders. Yeah, I mean, it's both for beginners, for professionals, and that crew is very active traders. So also, we will all probably give trades out that will probably make 10x your money, very likely. But anyways, listen, this is today's thumbnail. I think this is the theme of the day right now. Qualcomm has gone up like a massive amount. It's a little toppy right now, but also not when you really realize what's going on. I'll just say, I think this specific stock I put on the headline because I think it is central to what's going on, and it's a re-rating. And I think if you don't understand what either re-rating means or why a stock like this would be going up the way that it's going up, I think this is up like, I'll measure this really quick, but this was $120 something just the other day. It's up 100% in a month. And this is not a small company. So why would a large cap stock go up 100% in a month, especially when it doesn't have any data center exposure? And that's the crux of the issue. You think, oh, Qualcomm is cell phones. No. And so the general thesis here is that as we go into this, and I will explain this to you guys in a little bit, is that when you look at these companies, whether it's new or a lot, this is an old company. It's a very old company. There are a lot of old companies that you're like, oh, wow, they're pivoting. They have cash flow to continue to do this. They've been actually planning a lot of these things for many, many months, if not years. And they're now launching new products that, in short, make their piece of the pie that the market saw as addressable for them significantly bigger. And honestly, that in its own is the idea. Is that Jesse, my boy? What's up, Jesse? No, we're just introducing the situation. I will get into it in a little bit. But before we do that, make sure you like the stream, subscribe to the channel, because we drop stuff like this all the time. And what we generally do here is kind of go over what happened last week, what do we have to look forward to this coming week, and what the hell is going on in the market. And so because of that, I thought this was a good situation to kind of go over. But right away, it's really this. The AI edge boom. And yes, to me, like our generation's industrial revolution is greater than any shock that oil prices could give to the market, at least right now. And when you think of that, it's because even if oil's at $200 a barrel, just say, theoretically speaking, is that going to change the amount of spend that happens for AI edge? And I'm specifically saying the edge right now because that is the layer of AI that's moving. I think what we all know is that, hey, look, the core data center where most of the trading happens. Look, the truth there, most of that's already sold out through 2026, and a lot basically through that. Everybody said that. And so where does the next piece of spend go? It's to build out the edge. And there's a lot of gear at what we call the edge, and a lot of these old companies that live at the edge that are able to pivot and maybe add new products, stuff that they've been working on, or turn on new compute that sits here where there's a massive shortage. Yes, I think very, very short answer. Cloudflare is part of the AI stack. It's very much a big piece of the stack. But listen, overall, oil and the macro is still somewhat of an overhang, and oil itself is really the biggest overhang. But the AI edge and the re-rate around that specific piece right here, right now, is what's driving a lot of these stocks to go higher. If you use simple terms, you look at AMD, you look at Intel, and you're like, why have these stocks done what they've done? Well, we're coming off a situation where we thought there was going to be one CPU for every 8 GPUs, and that's no longer the case. Then we go, well, there's 4 CPUs for every 8 GPUs. That means that in that sentence, okay, well, AMD and Intel's addressable pie right there really just 3x. And then we go into, well, maybe it's 2 to 1. So for every 2 GPUs, there's 1 CPU. And then we go into it's 1 to 1. And what if we go into there's for every 5 CPUs, we need 1 GPU? It's not out of the question. But that idea is what's, the market's kind of like fumbling over. How do I value these kind of things? Why in simplest terms, that's why these stocks are going up. But again, it's you have to understand it from that perspective. It's not about PEs. It's not about anything that you can see on the current balance sheets or cash flow statements, because what we're talking about is increasing the addressable market. And if that is the re-rate that we're talking about right now, yeah, also true that a lot of companies can get over their skis right here, right now, because there's a lot of speculation, and not all the companies will be winners at the end of the day either. So we have to be aware of that, especially things that might be like quote unquote bottlenecks. Any bottleneck in a supply chain, by the way, yes, it can run very, very quickly, but it's more like a trade, because the bottleneck is not always going to be there. Eventually it gets fixed, but those are more like trades, not necessarily extreme long investments. But anyways, let's go on with the rest of last week's kind of recap. So Iran, yes, they shot like 4, I think it was 4 missiles in the Strait of Hormuz. And so the risk there still remains high. I believe the UAE intercepted about 3 of those missiles, and there was a fire. And these were the major headlines last week. Then the US relaunched Project Freedom to reopen or escort strait traffic. I haven't had any real updates on that, but again, it's because even me, I'm not nearly as concerned about the oil stuff, because back to the original, the AI build out is greater than any oil shock that can happen near term. And I think that's very true, right? The UAE itself exit OPEC plus May 1st. I think that's a big one. Adds a little bit of medium-term supply uncertainty, but we got a lot of macro headlines last week as well. We got ADP weekly, we got NFP, we got unemployment. Look, NFP came out really good compared to expectations, significantly different. Private payrolls was not expected to look like this, especially when you hear, and this is what's weird. So this is lagging-ish data. Cloudflare down, cutting 20% of their workforce. A lot of the hyperscalers are cutting off or laying off a lot of their workforce right now, and they will likely continue to do so. But what does that workforce do? Currently, unemployment is not, especially, I'll say this, when it comes to claims, this piece, continuing claims 1.766 million, which is, believe this, the lowest since January 2024. I'll give you my personal experience here is that when I stopped working, I was more or less in the group that is getting laid off right now. So you think of who is getting laid off from the hyperscalers, from like big tech companies, even somebody like a Cloudflare. Let's say Cloudflare laid you off. You were probably making $250K a year. Just so you guys know, if you are making more than a couple $100,000 a year, you're not qualifying for unemployment, and you're not going to get it. So the continuing claims here, this is not actually, I don't think is going to hit that, right? And so I think this is why we're seeing some of this. It's a different level, and what you're forced to do then is really two things. One, spin up your own company, a new company, which is maybe why we're seeing a lot of stuff happen in the small, medium cap names, or go work for those smaller startups with your current experience. And that kind of adds to some of their piece down there. Tesla, we can talk about. Tesla is a very interesting one for sure. But again, the macro thesis actually generally holds. Qualcomm specifically, and again, people not understanding this, listen, it was a massive beat, $20 billion buyback. But when we were talking about Qualcomm, you really think of them as a cell phone chip company, but that is not what they said on the last few quarters, right? What they've been talking about in the last few quarters is launching a brand new product line that sits in the data center. And so when you're selling into the actual data center, this is very different than selling a cell phone chip, completely different. It opens up a massive new addressable market, quite frankly, that could be bigger than their original or legacy market as a whole. And they have deals on deck. They have deals that are signed, and they have an investor day, June 24th. And as you do your research now in this market, investor days become more and more important, right? So I would say, the investor days now are on the quarterly calls, you'll get this. Oh, big beat, double beat, triple beat, whatever. We talked about this last week. Does not matter. Has nothing to do with what the stock is going to do. You could do a quintuple beat and a quintuple raise. It's not going to move your stock in this market. This is one of the most insane earnings seasons I've seen in a very long time. But the only thing that really moves your stock is a re-rating, right? And that's what we're talking about. If you now as a company have a brand new line of business, a brand new customer, marquee customer, go-to-market strategy, and you have real revenue showing that, and it's growing, that increases your available piece of the pie. That is making some of these stocks go a little parabolic, and that's very much what we're seeing. The highest, I think, target is for Baird on Qualcomm right now, sitting at 300. That is before the June investor day. And when these guys do their investor day, I think it's going to become very quickly more like apparent to the rest of the market that Qualcomm is going to put real numbers to this stuff, meaning Qualcomm is going to address what right now it's kind of like not really sure, but they will address what does their addressable TAM look like to them, right? And they're going to say, hey, these we already know. By the way, they've said that they're also working with a lot of the hyperscaler names, and they're very deep in these conversations for this new product, which is like an NPU, a neural processing unit for the data center. They're going to drop the names, and so investor days like this become really big. If you look at Corning last week, so Corning on their last call, let's say Corning 2 calls ago, GLW, you're like, what's happening with Corning, this old glass company? They're rebranding themselves essentially, and that is another re-rating story. They drop a deal with Meta for $6 billion for fiber optic cabling. That's massive. On the last earnings call, they say they didn't put numbers to it, but they say, hey, look, we have 2 more deals of equal size and scope to Meta with hyperscalers. But immediately on the earnings call, yeah, that's good, but they still didn't put hard numbers to it. And if you don't know that the first deal was for $6 billion with Meta, then 2 more means another 12 billion on top of that. So now we're at 18 billion. This is brand new market cap. And then Thursday, which was Corning's investor day, they rung the bell at the NYSE, the NYSE. They also announced another partnership with NVIDIA to do something called Scale Up, which, if you don't know, means NVLink, and now Corning cables are going to be in every kind of Blackwell that ever launches from here. And that's massive. And you could put a number to that. It's about $3, maybe $4 billion, in addition to the 18 that we already just clearly identified. And so the way this goes is that you find the names that are like, hey, we have big deals coming. And then they're usually under NDAs, but they'll generally quantify them. And then when they quantify them, then you see these same kind of deals expanding. This is the order of operations in which you find these re-rating stories. And so that I think is my point of like, look, you can't look at Qualcomm as a cell chip manufacturer, right? Corning, listen, Corning makes solar panels, they make glass. This is what I'm talking about. It's a totally what their addressable market for that specific segment of their business was extremely small, right? Or coming out of what the market thought was addressable for Corning was very small. It's not the only business that they have. They make a lot of other things, and yeah, so if they assemble whole racks with switches, I mean that's a big deal, right? So this is what we're talking about. That's what re-rating means, and it's about how big of a piece of the pie does the market believe in this moment versus the next that these companies can make or can capture rather, and that's exactly what we're seeing. So June 24th, Investor Day, big deal. Running up to this, I think that's where the market gets a moment. They might get a little ahead of themselves, but here's the deal. How do you find the next one? Do I have new trades? Absolutely, right? Do I usually save a lot of those for the server? Yes, and our group. So if you're interested in that, jump in. But if you listen closely enough, you'll get the deal. But how do you find the next one? Because Qualcomm, Corning, they're literally right now, Intel, AMD, 1 of a million. I keep saying that they're not 1 in a million, but the way to do it, I think, is what I just feel like people were generally missing. And if you think that the spend begins with NVIDIA, it in fact does not, right? And so if you think about it slightly differently, this will explain to you why certain stocks are not getting the love today. Does not mean that they're bad. I don't think you should sell them at all. But over the last few months, I think the term opportunity costs, and will probably continue, the term opportunity cost becomes very real for a lot of people because they're sitting in their very good stocks, right? But that are not in today's flow, maybe even buying the dip on something like ServiceNow, CRM, Robinhood, or SoFi. But when you think about this, specifically fintech, look, where does fintech play in what we're talking about? It doesn't, right? ServiceNow or CRM, also think about it this way. If ServiceNow or CRM were to release a very good AI product, who will buy that product from them? And this becomes the problem. We're talking about increasing the total size of your pie, right? And if ServiceNow released a very good AI product, the only people that could buy that AI product, by the way, and this is the piece, are ServiceNow customers. And that in itself is the problem. If Salesforce did the same thing, the only people that they will really sell that to are Salesforce customers. At least that's how you would think about it. If they change that, maybe the story would change. But until they change that story, it's not really going to be that beneficial, because look at a Datadog who has a completely thing. This is the second piece, is that you don't want to be competing with the large AI models. You want to be accessory to the large AI models, and you want to be enabling the companies that are enabling the large AI models. They're benefiting. This would be a compete. This would be a compete. This goes across everything. And so if you're an AI enablement company, this is a big deal, right? And so what that means is that, look, it's not all software that's going to be in the dumper, right? This, not all software is created equal. And when you understand that a lot of software is AI enablement like material and helps your AI get better, or it like doesn't directly compete, but helps us expand this. This is the first layer of software that will very likely get what we would call the bid in the trading world. Or yes, for sure, AI adjacent, like semiconductor adjacent, things like that. That's like Synaptics, Synopsys and Cadence. And there are different layers to this as well. So these are design softwares. It's only software, right? Synaptics, which is different than Synopsys, is edge, client side edge. So if you don't know about this one, that's what it is. But Synaptics is client side edge. And this is the last layer to actually go. So this would be one to watch from here. Go look up their earnings call. It's a big move, but the stock is generally down significantly. Let's see. You'd have to zoom out on like a weekly chart or a monthly. Yeah, this stock was at $300, and just the other day it was at $60. Before that, I think the low of last year is $40. Okay, but this is more like the beginning for them. And I think things like that, you really need to, it's worth your time to look into what they're doing. But generally speaking, it's not all software, and it's also not all semis. And this was the piece that was kind of blowing my mind. It was like, look, people are like, oh, so you're bearish on software. And I'm like, no, I don't think you're understanding. Ambarella. Yeah, Ambarella is a big deal, right? But, and I can't, there's thousands of companies that you can essentially fit into these 5 buckets. And these 5 buckets, by the way, are loaded with all kinds of other companies in here. This is just a couple, right? These are loaded with not just companies, but entire industries, you guys. And so that's what I mean by like these are industries, entire industries, right? And yes, app layer winners will come very likely later, right? If they can enable enterprise AI adoption. And I think that what you don't want to do is you don't want to say all software is bottomed out. I don't think that's true. I don't think that's right. You don't want to say all software is bad either. It's absolutely right. And it's again, it's not all semis, because not all semis are going to benefit from this. So it is a big deal. Where does Oracle fit in here? It's very simply, right? Like what are we talking about for Oracle? They're somewhere in between these two, right? So Oracle is like your neo cloud to me, right? But they are spinning up a brand new data center. Some of these data centers have to be built, right? Like CoreWeave, Ira, and Cypher, whatever, Nebius. They're different business models, and you understand the businesses where, look, if you're a Bitcoin miner turned cloud provider, you have a lot of Bitcoin mining gear that you have to expense off your balance sheet. That's a cost that nobody else is going to have. So that's one headwind, not tailwind. That's one hurdle that they have to get over that most others don't, right? 2, if you don't have you have to buy the gear in general initially. Amazon, Microsoft, Google, they don't have to, they're buying gear, but they have underlying companies that support it. Someone asked about Tesla, and Tesla is very different. Like if you think, so Tesla, I guess Anthropic bought something about like a Tesla, like a SpaceX data center in a data center in space. First of all, Anthropic doesn't really do deals themselves very often, so that's a big deal. Yeah, I got to turn my AC on. It's getting really hot. One second. It's not usually a thing, but at least not in the morning. But it's getting warmer, and I got a sweater on. But yeah, I think Tesla has already bought the gear, or XAI has already bought the gear, and that kind of opens up a conversation of like, well, maybe they redirect some of that gears use to some of these large AI models. And I think that when you think about what that could imply, that's a big deal, because one, Tesla wouldn't have to buy more gear. They've already bought it. There are a lot of companies just like this. Where's this sweater? I know, dude. I know. If I told you I didn't have a shirt on underneath this, then it might make more sense. But they don't have the cost of actually like having to finance a bunch of other stuff. Like even CoreWeave, who is clearly, when you listen to CoreWeave's earnings call, clearly an expert in their space, clearly a unique offerings, the only AI purpose-built cloud entire data center, the only one. That's a big deal. That is a very big deal. But again, they still have to finance a lot of these new purchases, and how are they financing it, right? So that becomes a question. That's a risk that in the original cloud era did not actually exist. In the original cloud era, Amazon, Microsoft, Google, this was just gear that they already had, and they were essentially repurposing. And so there are many customers just like that in this era. But again, you don't want to be bearish on all software. You also don't want to be bullish on all software either, in my opinion, just my opinion. But you need to think about, where is the money going? And the money does not originate at NVIDIA. It originates at the hyperscaler levels. So even Oracle, who we know is spinning up a massive data center, we don't know that Oracle is immediately going to recognize any profit on that new spend, but we do know that they're going to be spending. But what are they spending it on? That is infrastructure spend. And you're seeing this. This is the first no-brainer kind of moment. But on top of that, we're kind of like in here, right? What happens? What do those people spend money on? Sure, I buy real estate, right? I buy networking, I buy memory, I buy power, I buy all that kind of stuff. I buy compute, general compute. Who do those people spend money on? Connectivity, data, observability. Who do those, like the physical build out, right? Physical build out goes to here. This is construction. How is Caterpillar or AAON or Sterling STRL like an AI play? It's literally the physical build out of new data centers. And then the software will win. But it all comes from here, right? Like, who is spending? It's these people that are spending. And so these are the ones that you actually want to listen to, right? And they are spending it on NVIDIA, Broadcom. Arista is a networking company, VRT, Eaton Power, right? PWR, things like that. There's 1,000 other tickers that go in this bucket, but it's just unfortunately right now nobody's spending. None of these people are spending on these people. Like, no, it's not happening. And so because of that, and simply because of that, it doesn't mean they're bad stocks at all. It just means that right now it's not their moment. But overall, again, it is the entire stack. We would call it like the demand stack. This is the demand. Where are these people spending money, right? And they're spending money on all of these pieces here. And if you understand this is what the market's looking at, this is what the market currently cares about, these become big, massive opportunities. Again, not everybody's going to be a winner. Some of these companies will run massively, but the opportunity in front of us is just so insane that it takes stocks like these and kind of puts them in like everybody's back burner. Does not mean they're bad stocks, and they are not bad stocks. But again, I'll explain this. Arista is not getting left out. You have to understand Arista's history. And so Arista does live here. And you have to understand deeply what they do. Arista won the original cloud build out in almost its entirety, right? And so when you would have thought Cisco was positioned at the time to capture this new cloud spend, Arista is actually the company that won basically the entire cloud build out, like the old cloud build out from like mid 2000s. And when we listen, the research that's required right now, is not the typical research that you're used to doing for fundamental analysis. Like I said before, this has nothing to do with what you'll see on a cash flow statement or balance sheet. If you're looking at that, you're just looking at the wrong spot. Period. End of story. You have to listen to what the executives are actually saying. And what the market wants to hear right now, I'll tell you, is twofold. And it's very explicit, right? So one, they want to see, everybody knows that supply is constrained. They want to see that you're raising prices, right? You want to see due to supply constraints. It's a requirement. Two, right? They want to see net new customers. And not just like marquee customers and lines of business, they call LOBs, lines of business to capture new markets, entirely new markets, right? and then you want to see expanding on those two things. So if you have this magic formula, that is it. So this is the magic formula, literally right here. If you don't have this and your stock or company, like I said, does a quadruple beat, best ever earnings report, it's not going to happen, right? And so what did Arista do? I'll tell you guys, if you didn't listen to the earnings call, you wouldn't know, but Arista did not. What did they not do? So they did not raise prices. So Arista did not raise prices. They did not land any net new customers, right? They do have this, right? And they have two other new products. It's called Scale Up, which Scale Up competes with NVLink, right? So now they're competing with NVIDIA directly, and you're like, oh shit. And then they have something called Scale Across, which is what we've been hearing a lot on the data, on the transcripts, is like hybrid model to model, data center to data center interconnection, right? That's Meta talking to Google, Google talking to Amazon, Amazon talking to Microsoft, right? When you understand this connection from these guys, really these guys, 1 to 2, that is Arista's opportunity. They've outlined that is their largest opportunity right now. But again, the problem is what they said is that because of supply constraints, their customers that are ready to buy this, the data centers are not ready yet. And they push that timeline out even further. And so because of that, the market at least wanted to see raising prices, which they did not do, right? They do have this in the works, but they did not close them, right? And two of their new product lines, or one of their new product lines, well, two, actually most of them, actually compete with NVIDIA directly. Does it mean Arista is not going to win? No. But if you're asking why, even though it was their best quarter ever, double beat, right? Did the stock go down and still kind of slightly depressed? There's your answer. And it's as simple as that. And if your company doesn't do those specific things, it's not going to work, right? And how do you find out what companies are about to do that? That is, I think, the biggest thing. And that is why you look at this market and you're like, the amount of research that is in front of us right now is, one, different than it's ever been in a long time. Different than it's been in a long time. And two, the amount of companies that are doing exactly that, like, it's insane. It's literally thousands of stocks, and you're like, oh my God. So is it my hoodie's time? Not until they have something that solves one of these equations or these issues, right? But will it eventually be here for fintech? Probably. But what is the timeline on that? It's a little while. What was the time frame on Cisco? I'm not sure what he means. What was the time frame on? So why is Cisco doing it? Cisco, remember, lost the entire cloud build out to Arista. Cisco's new line of business is one of those, it's scale out. So it's actually a brand new product line that's doing well for Cisco that Arista didn't actually capture, but is also still working on. So Cisco does have that new product line. Cisco is raising prices. Arista was already expensive because they're the best, but they didn't raise prices yet again. And I think that is That's exactly why. And so, like, again, if you're wondering why, that's it. Same thing with Cloudflare. And I'll say this about Cloudflare and all other CDNs. And there are three companies that basically make the internet work, right? And that is Cloudflare, Akamai, ticker AKAM, and another little company called Fastly. And so these things, Cloudflare, massive market cap, massive multiple. They do have a product to address a very specific workload that I think is the biggest one coming for this next phase, which is like API calls and how to manage that kind of traffic and workflow. They have a product called Workers AI. Problem with Cloudflare, one, they did like lay off 20% of their company, but due to AI efficiencies, and they were basically like, oh, it's just the right thing to do. What they didn't do of that magic formula, they didn't do anything in that magic formula. They didn't raise prices and not only did they not raise prices, Workers AI, this new product that they're doing, it has lower margins than their historical like product set. So their margins are going to be coming down as they ramp this Workers AI product out and they roll it out. Did they roll out to any brand new large marquee names? No, they didn't. What they did do is they did attach very large deals for that space to existing companies, but they did not attach, they did not get any net new marquee names. Fastly, I think, is a technology first company, but they did get a lot of new marquee names. Oddly enough, Fastly sounds like they're taking legacy business from Cloudflare and Akamai, but they could somewhat articulate the opportunity in front of them, but they did not have a product set that was like, we are capturing this. We do have new marquee names, but not for the right stuff. Doesn't change my addressable market, but at least Fastly has a new CMO coming, who I'm actually somewhat familiar with the companies that she used to work for. I think that's a pretty good tailwind for them. And probably Fastly's recovery will be very much in line with that new CMO's ramp into the business and their ability to articulate the opportunity in front of them and create new products that capture exactly that, which takes me to Akamai and the third and the magic one, where what did they do on that magic formula? They absolutely did. The biggest deal in that ecosystem is historically $5 to $10 million, biggest ever, right? Akamai is a $17 billion market cap company. Actually, I have no idea what it is today. It went up like 30% on this. It's a $22 billion market cap company now. It was 17 a month or so ago. But think about what they did if you don't know. I just told you that the biggest deal in that space was $5 to $10 million. They signed a $1.8 billion order, like a single $1.8 billion sale. How does a company with sub $20 billion market cap do a single transaction for $1.8 billion when the market didn't understand? Like, the market sees their addressable pie as being small or so big enough maximum you're going to max out at 20 billion. It's paradigm shifting. And what they did was they launched a brand new product. Not only did they launch a brand new product, they got even more traction with said product. They landed the biggest deal that dwarfs anything else in the industry that the industry had ever seen. And what was it for? It was basically to spin up, it was basically to redirect a lot of existing infrastructure to, let's say like a hyperscaler. I don't know if this is official or not, but it was leaked that the deal was done with Anthropic, which is, again, in itself, just that alone is like, when has Anthropic ever bought gear directly as a service? You don't hear about it. And so two things, market, like changing the addressable market, changing what is now available for these companies to capture from a revenue and profit perspective, changes their entire trajectory and why we're seeing what we're seeing. So this stuff, again, today doesn't have anything to do with very good stocks that may not be moving. And that's about all I'm going to discuss on Hood, because why would we talk about more hood when we know that this is happening, unless something changes. But anyways, that's it for me. I hope that was helpful for you guys. But let's move on for the rest, because we got a lot of stuff going for this week. So we do have some economic data coming on board tomorrow, guys. If you don't know, is CPI. CPI is a big deal. In like, rates still matter here. Rates, the lower rates go, the better it's going to be for a lot of the spend. Higher rates go, it could probably put a little bit of a cap on some of the spend. But again, certain areas of spend in the market is not gonna affect what we just talked about. And I think when you understand that, it's like, well, shoot. Some of this macro stuff really doesn't matter that much anymore. Will it affect the consumers? For sure. Is there an absolutely bear market happening in some names? Guess what? There are, right? Look at, I don't know, Lululemon, like General Mills, like a lot of your staple names are not doing good. And you wonder why. That has nothing to do with what we just talked about, right? So CPI coming tomorrow. This is a big deal for the market. I don't think it's going to be a big deal overall, but it might be a reactionary kind of knee-jerk moment. And then Wednesday, we do get PPI. Also, we have a lot of treasury notes that I think just came out today, and we have the 10-year tomorrow, because the US sure does have a lot of debt to pay off, man. Sure does have a ton of debt to pay off. But Wednesday, we get producer price index. So CPI stands for consumer price index. Look, I was talking to a friend of mine yesterday, and she like, I guess she paid, as Micron cracks 800, as she filled up her gas tank, and I guess it was like $180 over here. Like, oh, that's a lot. And then I was talking to my wife. She filled up one of our cars, and it was like, yeah, she was like, it was getting over 100. And I was like, I'm cool. I just don't need more gas than this. Cut it off. But does that affect some areas? Yes. But what areas will it definitively not affect? We think about that, and you're like, if those companies get dips, possibly an opportunity, right? And so I hope that helps. I hope that makes a lot of things make more sense. And again, opportunity costs. There are good companies out there that are going down. Very good companies that are going down. They're not always going to go down. Their time will come. And in the meantime, there are a lot of trades that are available. And I don't think that this is going to be a 6 months more kind of runway. I truly believe this is like through the end of the decade, like through 2030 kind of thing. But anyways, then we get retail sales jobless claims, probably not going to move the market. Industrial production, this could be a good thing, interesting thing. But overall, in reality, it's this guy, CPI tomorrow, and PPI on Wednesday that are going to be the market's pivots. So if CPI is not as bad, that would be really wild. But again, that's going to be the pivot for the week. Moving on to earnings, and we have a lot here. Look, so far, and I track the Dow 30, the 30 largest companies in the Dow, tracking for a very good earnings quarter. Like, again, one of the biggest quarters I've seen for a lot of names. In my list of stocks, like if you do good, I feel like a 50% move this quarter is kind of like run of the mill for some of these. But yeah, it's a big deal, right? Okay, good. I'm glad, but has gone so high and trimmed into ASTS. So space is still a thing. The new midterms bearish. So, for Nebius, AMD, I think what we know is true is that they're sold out for things like Nebius, right? They're going to be booking more demand, but look at CoreWeave, look at IREN, look at some of those. Might be a little bit of a sell the news thing. So trim into earnings, sell the news is usually is what I would expect, unless Nebius does the magic formula. Of all the hyperscalers that are out there right now, or neo clouds that are out there right now, my guess would have been CoreWeave and Nebius, whatever you want to call them, had the biggest opportunity. It would just be a guess to put out that magic formula. CoreWeave didn't do it. Does Nebius do it? I think there's a there's still a good opportunity that it does because of where they geographically have a lot of locations. And if you listen to other transcripts, a lot of people are expanding into other areas where Nebius happens to live. But to your extent, I think that is expected. To your question, I think that's expected now at this point. So if they don't deliver, it could be bad, and has nothing to do with what their forecasts are or what their bookings are. That will not matter whatsoever at all. And then the new Fed, the new Fed chair, I think is interesting. First of all, Powell's going to stay on for a little while, and the new Fed coming in is going to be even more data driven. I've got a business background, even more data driven than Powell ever was, and I honestly think that that's probably going to be a good thing. And definitely those two things combined. Oddly, all right, Amazon second miss in a row, by the way. But Jassy is coming out pretty aggressively here. So I think the market is also okay with that as well. So that, other than that, everybody's beating their own forecast. And again, this week that we have on deck is just insane, right? I haven't even looked at Circle today. CEG, I should look at CEG today. This is an interesting one. CEG, yeah, a little down, but not a big deal. CEG has the biggest deal to power a data center on the board. They already have the deal. The stock is down from the highs about 400 from when they had the deal. You have to understand why, and it's because that deal was slated for 2027 with Microsoft, by the way, to flip on 3 Mile Island, which is like the biggest nuclear facility, biggest nuclear provider in the US. They have the deal, turn on 3 Mile Island, power Microsoft data centers, but they were ready, but the data centers were not ready to accept the power yet. Deal's still there. This is the interconnect. Again, another layer of interconnect. Data center wasn't ready. The whole project got pushed out to 2030. Stock got smashed, right? And so there are names like this where you need to know what's going on, or if you don't know what's going on, you don't need to know. You do what you want. But the deal's still there. It just got pushed out. Now, do you think the deal is still going to be pushed out? I guarantee you, the second that deal is pulled forward, because hey, timelines are changing slightly, and we're now moving ahead of schedule, that stock is going to rip to $400 instantly. The second that headline crosses. So just so you know, there's stuff like that, and that's what's going on for a lot of these things. Neo clouds, I don't know. Keel. My guess is okay. So did Keel for hyperscale for Neo clouds? I have no idea what Keel said, but their magic formula is going to be a hard deal with a new customer. And so if they did, that's what they needed to do. And they don't say that we're going to dilute, which is unfortunately what Iran basically said they were going to do. Man, we got ASTS or HIMSS tonight and AST. Oh, it's a big night. A big night. Microvast. Simon like this, if you own Simon Property Group, look, it's probably not going to have anything to do with what's going on. That's all I can say. On she's, I don't know. It's like they're not in the fold of like what's going on. Oklo, yes, but also no, because that kind of stuff is very far out, many years out. Maybe it bottoms, and chops around until the pull till they come to market. Till the go to market is like closer in visibility. They can put hard numbers to it. But there are a lot of companies here that will play, and I mean Cisco is super old dog here. But if they're getting traction on data center to data center, like hybrid cloud connectivity, that's their play right now. And if they get large deals, that's what it is. Doximity, I don't know. So I have this is not DigitalOcean. This is another old AI name. I thought maybe they could have something, but then again, I'm not sure. I had it in closing, but I don't think that's gonna. There are names like this that maybe they get a run into that might not actually hold. So that's what I mean. There are names that will run into their earnings print that may not hold. With Monday.com. Wow. Gave back the whole print. Look at that. This is the most wild earnings. Stock 70 to whatever. I don't even know what they did. You'd have to. I don't even have. Revenue up 24. Yeah. But it doesn't have the thesis. Doesn't have what the market wants to hear. Not yet. Anyways, that's where we are. So there is a ton of stuff still heavy. This is NNE maybe. Heavy earnings still to go. Some of these names are probably gonna get like smoked, and some of these are gonna absolutely rip. But I think when you're looking into earnings, these are the things that are the most important. And before we get into the charts, though, we always check in with our good friend Miss Cleo, who, if you don't know, she focused on the T in TA, which is in fact tarot. And if you don't like this part of the show, sorry, we're gonna do it anyways. Just plug your ears for a little bit. So let's get our weekly tarot reading on the stock market from our friend Miss Cleo. All right. Whoa. You almost got me here, dude. I thought I was gonna have to look at Boeing and it'd be like 400 already, and I was like, no, close, ish, but not quite. Anyways, this is how it works. So we get a reading from our friend Miss Cleo. The way it works is she gives us a theme card for the week, and then every day of the week gets its own little card here. And so, I mean, the theme card looks cool. It's a 10 of coins. Yep, but I don't know how to read these things. I'm total amateur hour on this, and I think it's funny, but like, does this look like we're making money? There's some dogs down here. There's an old man in the background, a little kid having fun. It looks fun. So maybe CPI is all right. So today, Monday, Page of Pentacles. This is our CPI card. I have no idea what to think about this. There's some people begging down here. I don't really know, guys. I don't know, but I think it's new beginnings is death. I think that's new beginnings. And then the Empress for PPI, Empress and the Emperor, and then the Lovers. I think the Lovers is very much like balanced. So I have no idea, but there's not even a single number card in the week that's like Page, Death, Empress, Emperor. What do they call this? Arcana? A lot of major arcana. Let's see. So she gives the read, which I have no idea how to read this, but so this is what she said. So the 10 of Pentacles for the theme of the week: dogs and kids are good. So I can go with that. Interesting to see a 10 here to match crypto's reading, whereas the 10 of Cups invokes emotions, the 10 of Pentacles evokes a celebration of wealth. There you go. Past few weeks have felt like a melt up. Yeah. Could we do it for another week? The card says yes. Ooh. Yes. Yes. It's absolutely based on this, James, if you didn't know, right? But we have to have some comedic relief, right? And if they're going to say TA is astrology or astronomy, which one is it? Astronomy, one of those two, astrology or astronomy. Astrology is based on this. Astronomy is numbers. But anyways, doesn't mean full steam ahead. Chop in the form of a topping pattern is more likely. So maybe get sold. TBD. Monday, Page of Pentacles, Chariot to Page. I don't know what that means. Doesn't help, which is fine because Page tends to do their own thing anyways. Mean version of the most likely play, but history says is an equal chance of trend or chop. Basically, she has no clue. What I can say is that chop will literally be a flat close. Trend will be, so that doesn't even mean chop. It's just like up, down. All right, we're down, up. So we have a 10 of the same suit in the theme card slot. This could give us a hint as to what we can expect for the week. So Tuesday, this is the one I don't understand. Death. It's what is she saying? Time to close a chapter and evolve into something new. I have no idea what that means. In our current trend mode, it could mean an explosion higher that doesn't look back, breaking the backs of all sellers. I feel like we've already done that. It could also mean death of price action, as in a dead day. All right, Miss Cleo. Death of price action, flat day. Does it really? She's going to do this? Listen to this. It could be final rally of the current wave. So it could go up, it could go down, or it could go sideways. This is so not helpful. I don't understand why you guys, this is no, it's not helpful. I can say that the last time it followed the page of pentacles was when the page brought a green trend day and death brought a flat close. Okay, whatever. I also say that in 90% of the cases, the card brings mean reversion in the next day. So, well, we do have this saying called turnaround Tuesday. So maybe we get a turnaround Tuesday. Who knows? Wednesday's the Empress. Back-to-back major arcana says there's big energy in play. If you look ahead, we get this card's male counterpart. If you look ahead, we get this card's male counterpart, Empress, Emperor, and yet another major on Friday. All I can say is watch out. This one should go the other way of death. So buy Tuesdays. So turnaround Tuesday, dip buy with moderate to strong trend. It loves to ground us at the start and then attempt a rally. Watch this part of the day. If the launch is rejected, sell rallies for the rest of the day. If it breaks the range, you can buy dips. I think she means chase. Thursday is the Emperor. Last time he followed his wife, the Empress, chopped red, and the Emperor chopped green. In fact, that was under a 10 theme as well. He has a green bias, and when red is barely red, this means we can buy dips for most of the day, chasing trend if it arrives. And then Thursday is the Lovers, wife, husband to lovers. All right, find that neat? I don't know, Miss Cleo, if that's neat or not. Whatever. What happens when lovers come together? They get distracted. If you know, seriously. This card leaves us open to weakness, which should subdue volatility, meaning red prices should be more of a slide than a cliff dive. It also gives green prices a chance to thrive without resistance. Continuation is the likely play, and mean reversion should push towards a flat close rather than a complete reversal. All right, so she's thinking dips generally get bought this week. The energy of the week is aggressive and wild. Hold on to your hat. Best advice she has. You know, guys, I just don't know if this was that helpful. Maybe, right? CPA, you know what? I like this. CPI is bad. AI does not care. I like it. I'm with that, right? Death card just for SoFi. But okay, somebody get this guy. We can come back now. All right. So what we want to do every Monday when I come in, or every day, honestly, when I come into the market, I have a quick view. I'm going to change some of my settings really quick so you guys can read this. And now we're going to get into stuff that actually matters, that people actually will look at. First look for me is usually SPY, Qs, diamonds, and IWM. These are the four major indices, indices at the top. And then on the bottom here, these are certain things that I might be watching from time to time that would be like kind of like gauges. So like the dollar here, Bitcoin, gold, and crude oil futures for me right now. But moving into this, let me just make this a little bit bigger for you. That's probably good. We'll zoom out just a little bit. Actually, let's zoom out a lot. So here's the daily, right? And so when I look at this, I have a measured move into 740s, and I think we had that as the highest average weekly range last week. So we finally got into there. Measured movement. What I mean by measured move into there is essentially I'm taking this here, this breakdown, that prior breakdown, and actually we're just doubling it. And so that full double gets us to 766 on the first full extension. And this area right here is 50% of that, 50 to 60% of that range right here. And so as long as we're holding 732 right now, I think that's fine. Actually, we got NFP as well. NFP says, if you want to know how this works, NFP says as long as we're over 738, we're better than fine, and we're just going higher. End of story, period. So that is the best news for you. So I will echo that sentiment. And I'd probably really say as long as we're over I said 732. 738 is even better if we can get through that. And if we can get through 742 on SPY, ticker SPY, I'll just tell you that we are definitively on our way to 766, which might seem wild, might not. I need to get one more. I'm going to get one more measurement and an average weekly range. Wow. If SPY stays on track this week, just for an average weekly range, it is to 760. Just underneath 760 is if SPY continues to move the way that it's been moving. Yeah, that's where it takes us. And then downside, if it does break down that below that 730 call it level, then an average weekly move takes us into the 20-day simple moving average, which is around 713. Quite frankly, if we do break down, it would look like this probably all week. And eventually the push through would take us to just under 700. So this is real support for the trend right now. That's the lower support is in the 700s, just below 700s. That's what bad looks like, what good looks like. And that essentially how you should read that is essentially that makes this area right around 730 the big pivot zone. So even dips down to 730, not a big deal. It's if we get a couple days closing below 730 that we'd really get that extension. What good looks like, on the other hand, is just continuing, but still continuing through this area. So we can chop like this is fine, right? And it's at that 740 area right in here that you'll start to see some inflection points where maybe a gap up, pull back, doesn't hold the gap, but buyers step in. That kind of price action, gap up again, doesn't hold it, pulls back, makes a slightly higher low, and buyers step in again. And then by the end of the week, closing into 760s post CPI, that's a big deal. That's what trendy stuff would look like. What whipsaw kind of things would look like is like CPI brings us there and gets immediately bought up to somewhere in 742. But again, this is not directional. It's the extension of or the reversal below that would actually give us the bigger tell. So CPI is nice, but it's from here. It's more about the trends and the daily counts of the trend count, higher highs, higher lows. Right now, it's higher than it was last week. That's all we really need to know. And we are in the mood. Like we are good to go. Q's, same thing. So 711, funny number, was Friday's high. It's very important to hold. Near-term support is about just under 700. A breakdown here would be below 6. I mean, honestly, a full breakdown is below 670, which takes us below 600 from an NFP perspective. That would be like down here would be like the entire summer dump. If this does not continue, this should only take us maximum to here, at which point you buy that dip with aggressive, like major buy. But I don't see that happening at this moment. What I can tell you, once the indicator set actually loads for us, any day. All right. Average weekly range to the downside takes us in here. Average weekly range to the upside literally takes us to 740. That would be your weekly upside target. Over 718, I'll give you this pivot, right? So 718 is the pivot. As long as we're holding over Friday's high, that's fine. We're heading here. This looks like this for the continuation. And so that is the next month or so continuation into nearly over 750 on Qs. Here, upside, you'd have to see that general traverse. And then support, big support down here Near-term break below 780, I believe it is. Yeah, a near-term break below 770. Sorry. A near-term break below 711. I'm sorry, guys. Triggers within 48 hours, the market will drop 12 points. I can tell you that near definitively just based on Friday's movement, but that doesn't matter because this is near-term support. I would expect that to get bought. It's tradable. I would not sell a dime. It's tradable. If it continues, then we continue down into here. That's basically what this is saying. But right now, I have zero signs of that. It's probably going to be macro if something like that were to happen. But I got nothing. Nothing that tells me anything like that is happening. Diamonds look good. IWM looks great. Crude still at 100. Market doesn't care. Market doesn't care. Gold actually catching a little bit bid. Bitcoin, we've been talking about this for a while. I think it chops its way over 90, just slightly over 90, and then we see what happens from there. But overall, broad sentiment, broad sector strokes look very good. I'm going to go ahead and jump into some of your ticker requests now. So I like Netflix here, but again, we have, like, from a technical perspective, the truth of the matter is I had 85. Oh, she's dumping right now. I had this spot 85 literally right here right now as my, do you buy it? I mean, you could buy it. This is when the announcement happened, 85. You could buy it, but it's going to come at as an opportunity cost. It's literally this spot. And if it gets back from here, and only if it gets back over 87, I would say just like this becomes your liquidity grab right now. This is a real fair value. This becomes your liquidity grab, but we don't see that happening in this moment. You won't see that till later. I think this 85 was kind of like the downside on Netflix for me. Below that, yeah, she'll probably give this whole thing back up to like 80s, high 70s potentially. But if you like it, this is a tradable shot. I see no reason to jump in yet because I need to see buyers step in, and that is not what I'm seeing. I'm just seeing sellers step in, and I have no idea if this is news driven right now. But anyways, this is a spot. This is a big spot for Netflix. Unfortunately, it's not in the AI demand stack. So like some things like this happen. It's like, wow, right? Extreme Networks. So this is historically a campus networking solution. So if you don't know Extreme Networks, you might not know Extreme Networks. I happen to know Extreme Networks fairly well. Historically, campus networking, which means like at the site, not in a data center, but like imagine if it was like this is your wireless access points. This is your campus. It's not access, it is switching and stuff like that on site. So like if you own a building that you need to have data get to from the data center, this is the end. This is the end of the edge. The further down the edge, right? So this is the edge, but it's client side edge. And also where I think, you look at a stock like Extreme Networks, if you don't know, look them up, do the research, find out what they're doing. Why is the stock moving like this? It's exactly for the reasons that I told you guys. But in terms of Extreme, look, this is a smaller-ish cap name. It's similar. Right here, right now, 25, that's your upside resistance. So I would not take action here now. I would watch this and wait. You do have a little bit of a session gap up here from prior earnings. This is a big move for this company. I used to sell not me actually. So one of my partners used to sell a lot of Extreme Networks back in the day. Most of this, like we would sell to like Box, not Dropbox, but Box. So we do know that this has a little bit of a place, but I don't know specifically their new product right now. But anyways, the trade looks like this. If it can get through 25 with strength, it's going to 30, just actually over 30. If it cannot get through 25 right here, right now, it goes back to definitively 21. These are your tradable ranges. You do not want to see this lose 21 with any strength. If it loses 21, then essentially you have another one of these on your hands right here, which would not be fun. But for now, this is a spot to take profit in, potentially look to roll if it can get up through 25 over 30. Because and then if this does extend, look, this is a $45+ stock, potentially 50 plus. If again, addressable market change potentially. So it's a good one. Arista, I think we're very close to my spot. So this is what we're looking at here. This is the first kind of like consolidation in here. Started to break. Just so you know, Arista last month, at the end of the last month, was $115. You know, I think Jay Shree, the CEO, gets a pass on this one. But and we gotta wait. Right now, the support is 133. Similar to Netflix, I want to see this getting back over 138. So if Arista from here gets back over 138, I think this becomes a buy, period. For a trade, this trade activates, and then the trade comes over up to 148, give or take. And then if it can hold over 148 before it breaks through 150, that will go back to 170s, and then some. Usually a lot of these names that got beaten up, I think people get a little frustrated. It's at least it's 3 days, right? So it's a 3-day rule, they call it. So this is day 1, day 2, day 3 here. So you're on day 4 after the digestion. I think just keep watching this. I'm giving you the level. If it's over 138, I'll give it to you clean. Just say if it's over 140, then it's on the mend. And if it's not, then it's really coming back into the 120s to this lower end of the support right in here. So that's where this lives. So basically it's tradable. That's downside in here. And I would just watch it for now. If you added, cool. I would just say don't add anymore until it's either not just because it's out at 120 either. It's either coming up out of the 120s or coming out of the 140s. And then I would add into strength and not try to jump in front of what might be a falling knife. Because like I said, for now, what they did do is they pushed out the timeline on all their new products. A lot of people didn't do that. So the market near term is going to question the credibility of Arista. Do they still have a seat at the table for the scale across? Or is maybe Cisco winning that business? Or maybe is NVIDIA Direct winning that business? It's very possible. Synaptics. So this is the absolute edge of the data center. This is just close your eyes and buy this. I don't know what else to say other than that. I get so many people, and we were talking at Chicago about this, I say people, a lot of friends that are like a lot, you know, they'll look at a stock that I might talk to them about, and they're like, yeah, but Jason, every time I look at a stock that you're talking about, it's up like 5-10%. And I'm like, and they're saying it as if like they missed it. I'm like, well, you think I'm talking about a stock for a 10% move? No, I'm not talking about a stock to capture a 10% move. Maybe a trade, but I would say like, I would be talking about short-term option contracts if it was a trade. If I'm talking about a stock, I'm talking about a big move. This is to 170, 200s. Just full stop. That is where we are. I think that's the first pit stop. If you get into the 200s here, then this becomes a much larger play. And this is straight technical read. Total technical read tells me we're going to 170, 200. So very early. Synaptics makes like the absolute end of client edge. Like if you search in your computers right now for Synaptics, guess what? It's in there. There's Synaptics drivers all over your computers. So like, yeah, their install base, if install base is NVIDIA's moat, for Qualcomm and Synaptics, the install base moat is insane. But anyways, I'm not even worried about support on Synaptics. It's $100, but I'm not even worried about it. So Corning, let's take a look. is on another ripper. Again, re-rating for the entire market. People were like, "Oh, I can't chase Corning because it's just gone parabolic." I was hearing that last week. First of all, last week it was not going parabolic. Last week it had been going. It had basically been the same price for 2 months. So no, it's not parabolic. It had not been going up. You're just not watching the stock. So look again. And so yeah, this was going sideways for the better part of 70 days, longer than 2 months. It's just now starting. And then you go, why is it just? Sorry, I'm raising my voice now. You guys know. This is why I always lose my voice. It's just now starting because of rewind the video. I talked about it already. Market, like addressable market, actual real deals, actually putting numbers to those deals, actual major marquee headliner names. Do I see Apple at 300? I don't know. So let me take a look. I do see Apple significantly over 300, but I do see it. So into July earnings, which is into, I don't know when WWDC is. I feel like Apple is if I'm talking about what we call the endpoint, the client side edge, dude, I feel like Apple is just a big giant sleeper that nobody's paying attention to. It could be the biggest sleeper play of all of them. Who knows? But support here, 288. Upside is over 300. Call it 315 into July 4th weekend, which is this from June. That's their biggest time of that's their strongest seasonal kind of time. Otherwise, you lose 188 or 288. It's more like 275 support. Again, either way, if it's 275 support, it's still that target longer term. So first target, second target over like 233. And yeah, but major support is going to be right in that 270 area. If it sees that, I think that's a buy. UNH, not in the stack, but major turnaround. I think this is it. This is the level. I'll just say this is very likely on its way to 500 this year. Or like this year, I think this recovery is already inbound, already happening. 320s, give or take, is support, but does it have to break out here now? No, it doesn't. It's only the second time it's attempted to do it. So if it does get smacked on its attempt to break through this 380 kind of major inflection point, I would expect this to come back in somewhere around the low 300s and then start to bottom out and then take another shot. Does it get through on the third shot? Honestly, usually the third shot is like the biggest fail. This is only the second one. So like, let's say this only does this and it takes another third shot. On the third attempt, it probably would come down this way and then actually get through like that. So that's what I mean by through the year. Maybe this happens on earnings where it actually dumps, who knows? But I think near term, I wouldn't chase this one because it's not in the theme. DRAM and Oracle, please. DRAM we're not going to do, but Oracle, the DRAM, you can look at a lot of stuff. You can look at SK Hynix. You can look at Samsung charts. That's the biggest thing. Oracle, you're 200. This is a good spot to stall. In this stalling action from this low to the high, support is going to be around 180s. If you see that, I think this ahead of earnings, to me, it was into 200s ahead of earnings, potentially further to 220s. But then earnings has to hit. I don't know if this makes it, but even if this gets taken down, I think it's still on that trajectory to your 250s. But gambling into earnings, through earnings, I don't know. Into earnings, I think is your easy money. Ambarella, this is the edge. This is Extreme Networks. Extreme Networks. There are companies like Ambarella who've been talking about this moment their entire existence. So I'm not going to go too far into that, but I will say Ambarella has been talking about this moment since inception. You need to look into it. If you believe it's their time, cool. San Jose-based company. I know some people that work there. It's video first networking stuff, but again, client side edge is what they play in. Very interesting play here. Very nuanced. Like nobody knows what the hell this company does, but I'm just telling you guys to go ahead and research it. It could be their time. It's very interesting. Is it? I don't know. Chart says it's good. I can say this is an easy layup, at least into earnings, which it's been running for the last month or so. It's up like 40% in the last month, just on the expectations of this actually being their time, 65%. This trade right here, just like that, 65% from here to there into the earnings print. I think that's the easy money. This is definitively easy money. Does it continue? Probably, but then does it survive past earnings? That's what we don't know. This is into 88s, potentially high 90s before earnings. Very small cap ish, $3.5 billion market cap company. Interesting company, founder-led CEO, and technology first company also. So similar to Fastly in that sense, but yeah, Nokia, different story. Nokia is it's not a company turnaround to me, but Nokia bought a real company that solves a real problem in the real AI demand stack. And so because of that, the company they purchased, my God, is got to be growing like a weed. And that, I think, is what you're seeing in Nokia. 1450 is a big deal. Over that, so you got 17. This comes from a very long downtrend break and like really just kind of extending this piece. And if we go from here to here, I could get you another one. Yeah, I'm getting 20s. I'm getting roughly 20s on Nokia. Q. I don't know this company at all. Looks new. So if it's new, is this a spinoff? Manufacturing electronic materials, semiconductor electronic industries include, you'd have to look, Epic. I know it's a hardware company. Microfill, Arista. I don't know some of these. And Silver include printed circuit boards. So printed circuit boards, yeah, that's done deal. Display materials, yes. Electrical installation materials, yes. I just don't know. I don't see anything about this being a spinoff, but this looks good. As in terms of the area, a $32 billion market cap company, I should know, but I don't. Qunity, next leap forward, industry leading microlithography. Okay. Advanced technologies. Yeah. So this kind of stuff, your watches, guys, that's where AI is going next. And the chips that are addressing that, because they're going to need more compute at the absolute client side edge also, is probably what this is doing. Again, that includes like your car, your phone, your wireless stuff at home, all that kind of stuff. This looks good. That's Synaptics too, wearable, all of this. This looks like everything that they do is in the right theme. Do I know them specifically? No, but it looks good. And if it's a new company, you probably can't sell. People can't sell, so 175. So you got first stop here, just technically speaking, to 163, then 175, then potentially twos. This is mostly because like a new company, there is no liquidity and no sellers available. DRAM, guys, nobody cares about DRAM. What? Okay, so I don't care about DRAM, but like, because what I'm saying is like, will this continue to go? Yeah, for sure. But like, you have to look at Samsung. I don't ticker. So like Samsung is up 6% today. I even know. Fucking sorry. The name Samsung. SK Hynix. I can't find it. I'm not doing TA on. It's gonna go up. Don't be ridiculous. There are yeah, well, don't be ridiculous. There are 100 other companies though that are gonna go up more than this, is what I'm saying. This is very much consensus. It's fine. Wolf, yeah, here now. Go ahead. This is beginnings of what we call a reversal. Post earnings. Yeah, this looks like 29s ish. If it can get through 25. If you can get through 25, 29s. Cisco, kind of just dropped a little bit on the Cisco stuff. I mean, $100. When do they have earnings? Soon. So it's going to come down to earnings. Is it extended? It can continue to go. I kind of gave you guys a reason why. They literally lost to Arista when it comes to, they have earnings like right away. I can't do it. They literally lost to Arista building out the actual cloud. So they have another shot to do it. A lot of this is like, yes, there's traction, but if they don't report, we're raising prices. We have brand new, net new, major marquee names, and we're growing more product lines. This is the deal. A10 OSS. A10, very interesting, smaller cap name. Yes, A10, right? So A10 Networks is a little bit different. It plays somewhat, it's not a networking company per se. It is a networking company. Let me take that back. $2 billion market cap. What they do though is a little bit different. And we used to sell this. So scale your infrastructure. Look at this right on the whole page. Boom, right? Shift your business. Legacy business, by the way, has a lot of footprint for AI specifically. New products, there you go. Highly likely that they have new like names. They do DDoS. They do infiltration. All this stuff. It is not a CD. It's not a CDN, but it's a lot of stuff that has to do with that. This is like web application firewalls, things like that. So think of like security for networks in the AI environment. It's a big deal. Low latency, massive, right? Operations, yeah. Likely, yes. Chart, yes. This is about to go. This is going to go where? 30s, mid 30s on A10. OSS probably continues. OSS is something called white box, we call it. White box is like no name, no brand, super tiny market cap. At least it's a little bit bigger now. Still not that big, 388 billion. They just need like to release one name and be like, oh, okay, we're good. Celestica is the other white box solution out there. So Arista's competition is also Celestica now. And Celestica, very low margins. It's when I say white box in the enterprise, you can equate that to knockoff. Like, sorry, but it is what it is. It's no name, unbranded knockoff gear that is cheap and scales. But that's what's kind of needed right now. So you think about Arista, they'll probably end up taking market share from Celestica eventually. But as the technology expands and hardens, if you will, Celestica is significantly cheaper, direct compete to a lot of Arista products. So like as these companies will try to do these new builds and figure out what's needed, Arista doesn't have the time to well, not time, but it's like they have to burn in some technologies. There's a lot of test phasing. Arista coined a term called blue box, which is when you go essentially white box being like your initial test phase of some unbranded gear to blue box being new technology, but has a brand on it. Arista's at that on a blue box tier right now with some of these larger deals. But right now, for sure, the market knows Celestica is taking that, although very small margins. Corning contract, yeah. That's copper is dead? No, dude. Copper is dead. Okay, so tell me copper is dead, and then you look at Teck Resources. No, it's not. This is my new copper miner. Copper is not dead. Copper is not dead by any means. Like, no, it's just not. That's ridiculous. FCX is probably on the mend, but FCX had earnings, and what happened with Freeport is that here specifically, what happened to them is that they have a facility that had to get shut down. So because of that, they were not able to produce a forecast that meets the supply and meets what the market thought they were going to do. So the stock gets hit. This is a very FCX unique specific thing. Oddly enough, that's bullish for the broader copper complex because Freeport's not going to be able to produce as much as the market thought they were going to produce. So therefore, I go Teck, TECK, Teck Resources, copper miner. There you go. Yeah. Rocket Lab, I believe it. APLD. I did talk about ANET. I talked about it a lot, actually. COPN, I don't know. COPN, I've heard of. Oh, God. Connie's killing me on this one. I don't know them. Full scale OLED micro. Okay, so this is client side. Manufacturer scale. Wearable technologies include components. Yeah, so this is the next level. This is like the next level of some of the stuff that we're going to go into. Markets, application, technology products. Yeah, I think application specific optical assemblies, enhance human performance. Just be careful with the word optical. It means a lot of things. ISO certified race test supplier and part system to meet. Okay, that's interesting. Probably yes. Class 10 cleaners, wafer processing. Yes, probably overflow stuff for the bottleneck of the market. So yes, it's in the right spot. It's a small-ish market cap. They have earnings coming, so you have to, if they don't do what they need to do from a sentiment perspective, which is like that magic formula I just outlined, then it's probably back to 3.5. If it does, then it's probably over 650. Very binary here. MSTR, Rambler, get out of here. What are we doing, right? Bitcoin is going to 90 something, so MSTR goes to 240. You good with that? That's where she's going. Qualcomm TA. I mean, it's kind of like to our group, but I gave you, like, there are targets out there for 3 easily. Oops. Oops. There you go. So yeah, I got over 3. 286. She goes 286. We're just breaching this prior high right there of 230. First stop is 300. I don't understand what the maybe I don't understand the question. I do. I kid. So it can chop around a little bit here, but again, catalyst on deck. We just today are breaching this 230 high. There's a little bit of a gap overnight. This is the biggest deal, right? So 230, I think from here, what I just tell you, I took some profits on leaps, rolled them up, rolled them out, rolled them whatever. I don't even think that the Qualcomm strikes go up to 200, 300 yet. But yeah, she holds this trajectory. She's going over 300, but 300 is just the first stop here. This is, when was the last time we saw like a major market cap company do this? I mean, it's been a long time. It's been a long time. And this is just like, this is what I'm saying. This stock, if you missed the story, 120 to, my God, it's doubled in a month. But when you understand, like when you start, now you don't have to understand it, but when you think about why, it's like, okay, it's not a cell phone chip that they're making. It's a much larger addressable market that they're finally releasing a product to attach and supposedly getting a lot of traction on. That could be much bigger than doubling their addressable market. That could be significantly larger than doubling their addressable market. So the 24th of next month, I think, is going to be their investor day. There's probably going to be a lot of headlines coming out. But again, I would not expect this to stop. If you see 200s or anywhere thereabouts, it's probably a buy. But just on speculation alone. OSS, Nokia, Ambarella, I did all those, right? Ambarella, yes, right. I basically told you guys it's is very wild, right? So you need to look into that company and what they do. And I would just say that they have been talking about this moment since the inception of their creation. And this, in fact, could be their moment. We don't know, but we're about to find out. It's run a lot into earnings already. Chart looks good, but once we get to earnings, it's gonna be a big deal. So SMCI here, maybe a little bit extended. I think 32s. I heard our buddy Amit talking about this the other day. or today, and I'm like, yeah, this. So I had a thesis on SMCI not too long ago. I'll tell you what, my thesis never changed for what the company can do, will do, etc. It's just what happened was that the management lost all credibility with the market. Absolutely lost all credibility with the market, and because of that, it's just it's not fun. Is this company going to grow? Abso-freaking-lutely. If you don't know, there's a company called Foxconn, HNH, or Hon Hai Precision, which is the ticker that you can buy. I believe you can buy, and I bought it, but I don't know if you can buy it in like Robinhood or not. This company here, Foxconn, which is the ticker, has we talk about Celestica being white box or whatever. Foxconn actually assembles all boxes that go into a data center. These guys make 80% of every piece of hardware, including NVIDIA's. It's close to a monopoly in the data center area that you can get. Why is stock not absolutely exploding? It's a barely 6% margin because they're an assembler, but everybody, Dell, HPE, like not SMCI. I'm going to get into this. Dell, HPE, Cisco, all your brand names go to Foxconn to be assembled in Taiwan after they come out of TSM factories, believe it or not. And that's how the supply chain actually works. SMCI is the US equivalent of a Foxconn. So yes, the gear is not just theirs, but they also make a lot of gear for a lot of other companies. And they do it at very low margins. And so the market doesn't necessarily like that. It's very custom gear. But is a company like SMCI going to grow? Abso-freaking-lutely. The only question is, does the market reward them for that? I don't know. Eventually, probably. But with the current management and the current sentiment and current financial situation, TBD, right? And if the market does reward them, is it significantly higher? Like you talk a double, triple from here, but in the next few years, and that's a whole transition that would take a very long time to do. But for right now, I think if this pulls back and this holds, low to mid 30s, low 30s, the market's telling us that they're willing to look past some of the previous transgressions. That's all I can say. Have I already done Amazon? No, I haven't done Amazon. So Amazon looks good. I think, the one thing I'll say about Amazon is looks like it's in a holding pattern for right now. So usually on an earnings move like this, what we do is we say, okay, you get one attempt to break the highs. This is your high, 277.10, right? Earnings high. So when the market received the data got their last earnings report, the low is 245s. You get one real shot, and we usually hold about 50% of the range of that first earnings candle. And you get one real shot. So you got 1, 2, 3, 4 shots really here. It didn't break through. So this is a no-go right now on Amazon. So what I would expect is that it goes back into this 260 kind of area. And then I would expect it to take another shot here. But this whole process is about 45 days, about a 45 day 45 days rest right there. That's typically what we see. What you don't want to see happen here is if this loses 255, then it actually goes back to this area here. So if it loses 255, then you probably see, it's not even that big of a deal, 245 down here. Net, Amazon, hold it, not ready to trade, probably gets a little bit of pullback, but when it's making its next attempt at 270, after it pulls back, wait for it to show you that coming out of something like that. Then you could take another shot, probably somewhere around here for that next attempt to break through. And if it does, cool, then you're into 300s. But I think this is on a trajectory for 300 eventually. But is it this week? No, I don't see that unless we have a headline that changes the story. So expect a little bit of pullback and then eventually go. How about Clorox? Perfect example. I think $7, $8, $9, $10 gallon gas is very likely to affect the company Clorox. You know, it is what it is. But not all stocks are great. You can't just slap three letters together and do well. Unfortunately, Clorox is not in the name. High CPI will absolutely wreck Clorox. UHS, I don't know this one. UHX, this is health services. You know, there's a company here in this space that is on one of my lists that you should probably take a look at. See if there's any, not to buy, but to see if there's any kind of alignment here. Universal Health Services, behavioral healthcare. It is exactly in this segment. I'm not familiar with UHS that much. Other segments consists of centralized services, IT, purchasing, Prussia, headquartered in the King of Prussia. I know nothing about this stock. 10 billion. I don't even understand really what they do after reading that. Health services, culture leader, I don't care about. What we do. What do you do? Nation's largest most providers, hospital and healthcare service. Yeah, okay. It's not in there, but I'll give you this one. Target Hospitality today up 16.76%. Why don't you look into this stock, right? At a 1.78 billion market cap. It's very small. There's something going on here. So pull up the transcripts again. What did they do? This is very much same space. Largest US accommodation hospitality services. There's a big difference that I'm seeing right away. Oh my God. Did I just find the craziest sleeper AI play ever? No shot. Fuels super powered, crazy productive teams. I mean, wow. I'm just telling you guys, it's stuff like this that you're like, are you serious? Look at what they're doing. Are you joking? I mean, we saw DoorDash. What if DoorDash, you guys, what if this is the sleeper trade of the century right now? This has got to be the sleeper trade of the century. Like, what if DoorDash is running or ran? Look at this. What if DoorDash is an AI play because people are so busy? Like, could you imagine building out the next generation of data centers? Like, yeah, what's happening right now? But there's like, dude, okay, there's something happening here. I don't have time. This is what I mean. And this is the market that I'm like, I don't have time to do research on all these companies. I need your help. The community needs your help. Like when you guys drop names like UHS, it makes me think of things like this. But yeah, this is Souls. I love Souls. They just reported this is Honeywell spinoff. Yeah, she's ready to roll. Ready to roll. I got 120 on this bad boy. Is she ready to roll? Almost. Very, very close. I got 120 on this bad boy. This is a re-rate play right here. Honeywell, buy it. HON. Absolutely. If you didn't know, buy it, right? Massive spinoffs coming. Buy it like with both hands. Both hands. Mega cap. Yes, I know. I don't care, right? 130 something billion. Buy it. Not financial advice, but I'm buying it. Do what you want. This is going to be an AI story. You watch. You don't believe me? Just watch. Yeah, this is crazy. Souls is a big deal, right? I just say that's a chemical company spun off from Honeywell already. What do those chemicals like actually supply? Yeah, you figure it out. It is Iran. Or you want to do Iran? Cool. This is not Iran. It is, but they're in the data center. Chemicals for what's the other one? AGX, I think, is Argon. Near monopoly on all your. You don't know. So here you go. Giving you guys one. AGX near monopoly on before Souls of some of these these gases and chemicals that are needed to build a lot of these chips and things like that. Hello, right? So you want to talk about Iran instead, though? I gotcha. This is what I mean. This is what I mean. There are so many opportunities, you guys. It is insane. The amount of work, though, to find some of these names, it's unprecedented, like for many people. So, anyways, $60 is hard support. I think Iran's diluting. I listened to the call. To me, they sound like amateur hour. I don't want nothing. This is tradable. Absolutely. I don't think they're investment quality. I do think they could still get to 120s, 110s probably, but along the way, expect massive dilution and the chart to break from here to there, right? This is resistance. Near-term support is going to be 55. Near-term support, 54, right? Larger support remains 42. That's all I will say. Larger support remains 42. Near-term support, 54 and a quarter. But I think very tradable, just not investment quality. Oh, see, my dude. So MOD, liquid cooling. How is this not going to go up? Did you not know it was liquid cooling? Now you do. What do you think is happening? So these are the companies, no question, that you need to be looking at. And I'm telling you guys, the amount of work to find these is intense. In our private group, I've already released our data stack, right? Or our initial list, and the list, which is this list right here. And it's an entire document that was the initial starting point. That document itself had 150 names, of which all those names that doc was released a month ago are up like 30-40%. The opportunities in front of us, if you do the work, that means I gotta go, is absolutely ridiculous. So these guys already reported earnings here not even that long ago, February. They're not going to have another report coming for a while, I don't believe. Just double check that. Yeah, okay. So May 27th, they got a while. Expect this to continue to run. No sell on this. Do not sell this. This is first target 289. This should be around 350s before before earnings. Yeah, I said that. Powell, absolutely. This goes in your Quanta Services bucket. This guy sold off, by the way, on earnings not that long ago, from 278 down to 250. It is now over 300. This is a near $12 billion market cap. Like Quanta Services competitive company, right? So this is probably the guys that are literally like building, not probably, but this is Quanta. This is a mini Quanta. If you don't know who Quanta is, it is a never sell company. It empowers the entire grid. These are the guys that these are the two companies that everyone is begging to come to work for them because their backlog of work is insane. We're talking for Quanta, tens of billions of dollars in waiting contracts to be delivered because they cannot get there fast enough. This is why CEG hasn't powered Microsoft yet. But you want to talk about bottleneck? There you go, right? Powell, Quanta, absolutely never sell, right? So there it is. MP Materials, probably one's bullish charts in the world. This is a little early. It could be pretty choppy, but they at least just got through earnings and they're not falling off a cliff, right? The setup here looks very bullish, extreme bullish, like setup here. This is actually support. So from here, if MP makes a recovery, this is potentially over $100. And it is what it is, right? Like it is from a technical perspective, but also from a fundamental perspective. It is what it is. $80 is the first major resistance. It's not seen $80 in a long time. If it can get through $80, then we're going to see just under 100. If it gets through 100, was about 140, 135. That is the trajectory on the MP. Marvell is good. I think I got to go soon though, guys. I see a lot of tickers we have done after we release this. Yeah, rip elf, RIP. Because why? Because it's not in the stack, man. Rewind, right? Enphase, it might be, but you know what? Enphase is a maybe. it's just now getting to a spot. I'll tell you what, their Enphase's story is like storing the power at the data centers. There are old companies that are already doing this that are ripping off of, look at this low, this solar company. This is renewable power, right? Storage, whatever. Generac. This may have just started. Who knows? Enphase is possible, but what do they need to have? Did they show that on the earnings report? You got to go pull up the transcripts. If they say that they have contracts now with someone, cool. But if not, it's gonna be hard. ASTS, they report earnings later, so you gotta wait for that. But I think it's gonna be after hours tonight. 89 is first one. I think this was a pretty straightforward. What do we call pairs trade with Rocket Lab is what the sentiment is right now. You want to see this holding 77. Upside is over 100 on this near term. COPX, no, wait, did we get a super chat? Hold on. I can't see super chats. Why? Why can I not see super chats? Hang on. We're not leaving. Okay. For some reason, I cannot see them. I'm bummed that I cannot see them for whatever reason. Somebody really quick. Thoughts on MRM. Somebody really quick. Tell me the super chats because I can't see them in here. It's very irritating. No. Honeywell does their own memory. Oh, that's a big deal. Lulu and Rocket Lab. All right. Ruru. Thank you. Jay Takes. You rock. Ruru is, I almost bought some Ruru pants for the first time in my life. This is a true story, but I did not. Yeah, this is a tough one. So yes, this is a company that will be affected by $10 a gallon gas in California. Also, they have a turnaround story issue. The support is at 70s. It's $126 right now. This little, if you're looking at this little blip on the radar, over here, I just don't know that that's going to be a real one. Let's update this. And also, we're going back to like 7 years ago, where I'm not sure how relevant the stock is going to be. The stock at that point was actually doing well. 160 was a big deal. You can see this on the right-hand side of my screen. I think pretty much everyone is already out of this that was in there before. This takes it to the 70s. I had a running joke before that this was a sub $100 stock, but I didn't actually expect it to happen. But yeah, it's coming back into this area. Plus, they're losing to they're losing bad to like Uniqlo and all those kind of companies. Like, I just don't see it. But that's, if you want, I would see this more as a short. This is a spot, but it's not like the spot. And definitely not one where I would try and catch a falling knife. The lab of rockets, it was always $120 stock, $120 stock. We said this so many times, didn't realize that this earnings was going to make it happen, but it remains to be $127 stock. So this is what I expect. So I think Rocket Lab can rocket continually if it can get through 121.30. This moment is literally this measurement. It's what it is. It's this area here measured, and this is 50% of that right here, right now. So like basically you double this, and where we are right now is that 50%. line of this double consolidation. So that was my upside target. I had a little trade on this, but because they're so expensive options, I had to use a spread. So if you're trading this, absolutely use. I think you should use spreads on this. I think you do like 1 by 2. 120 is like my upside in here. So I think this can continue to like 127s, and then it'll probably chop like this. Once this gets through 120s, you don't want to see it lose 120s though also, right? So I don't want to see this. If that happens, then you're back below 100. But so assuming that doesn't happen, this is coming into resistance right now. But I would expect a trajectory just like this. So I expect this to happen. I expect a little bit of chop. And as it gets through 128, that becomes 140, and then up to 165s right there. I think there's multiple catalysts here. So at least it's past the earnings now. Now it's all about, not all about, but now it's SpaceX IPO. This is a 100% momentum play to me in this scenario, but momentum has been winning. And Rocket Lab, I posted this not too long ago, has been acting right? Like, so Rocket Lab has been doing almost exactly. I wish Twitter did a good, I don't think it does, but boom. Rocket Lab followed technical pullback and extension perfectly. This was posted April 16th. And on April 16th, I said 120 plus. Ta-da! Proof. Lock it in. You know what? I don't get a lot of love on Twitter. You guys can go whatever, retweet it. But this was here at this point, right? And so at this point, coming out of $60 support, this is what I like to see. As it's getting through here, boom, this is way ahead of earnings. As it's getting over 85, once 85 cracks, then I don't really have a question. This is like my type of, I do this kind of setup. I don't really have a question that through 85, it's going to 100 and likely into exactly this level. And by the way, this is exactly that chart that we just showed. So Rocket Lab here now, that is that. There's your update. I think you're well on track. This is what I would call like a spot to take a little bit of profit. By the way, massive profit. I actually took a little bit of profit today. Doesn't mean it's done, but I think expect a breather above where it's trading today. And then if it gets through 128, you're on your merry way to 140, 160s. So I did not. I'm telling you, I posted this. I posted it. I'll fucking retweet. Sorry, curse. On April 16th. What do you want me to tell you? Congrats, you guys. It's a big win. And I know a lot of people have been sitting in this. This is a name that if you got frustrated, and what I don't want to see people do is I don't want you to chase something. I'm not charting DRAM because I don't want people who are sitting in a Rocket Lab equivalent on April 16th that are frustrated that Rocket Lab wasn't moving for a month when DRAM and the equivalents are ripping face. You're going to sell the low, and you're going to sell the low. You're going to buy the high, and then you're going to come back because your stock that you just sold the low on is finally ripping, and you're going to buy the high of that. that is the deal, right? VIAV goes in the stack. It is a big part of the stack. Look, you want to, I don't have time for all of it right now, but what I will tell you is that I will give you this. I will make this a little bit bigger, and I will make this a little bit larger. You want to screenshot that? Today's biggest winner from the stack. There you go, right? The IAV is here. No, sorry, that's VCore. Oh, I got them mixed up. I think VIAV is there, maybe not, but these are the top winners of the stack today. Lock it in, do what you want to do. VIAV is in the stack. And so I would not pass on VIAV, and I would be long on anything in the stack. But I appreciate you guys. It's time. I got to go. I'm sure some other of our friends are going to be streaming here in a second one. ETH, go pull our other ones. It's long. ETH should be 3K. ETH should be 3K for sure. And we did SMCI, not ARM. But again, follow, ping me, whatever. I love all of you guys. It's about the community. The opportunities in front of us. It's not a joke. This is literally generational opportunities yet again. If you know what to look for and how to look for them, which I just outlined today, there's too many opportunities to chase all, but some of these are just insane. A lot of them are just trades, but a lot of them are, I think there's a lot of runway. I think that for some of these areas, we're not even in the first innings. I think for some of these areas, we're in the pre-planning stage of the game. Like, we're not even in the first inning. So no, I don't think this is a bubble. No, I don't think this is over. Yeah, I think there's a lot of room to go. And while companies, names like SK Hynix, Samsung are probably not going down, they are consensus, but there's opportunities to take many multi-million-dollar millionaires, if not billionaires, are about to be made if you put in the work. So that's my sentiment right now. Until otherwise, until proven otherwise, I'm staying there. I love you guys. I'll see you on the next one. Adios.